Our next guest is a millionaire several times over because of his property investments. He started young at 22 with $35,000. He's increased this initial outlay 100 times over in less than 10 years, in fact more than that, which has enabled him to retire from full-time work. That's kind of the ultimate goal for all of us, isn't it? But listen to this. He's never sold any of the real estate he's bought, and he doesn't own his own home, but actually prefers to rent, which makes no sense to me. So we're going to have to ask him. We welcome to our show this morning Chris Gray, one of Australia's leading property experts. First up, you don't rent? Seriously? Why is that?
Well, the whole thing
Sorry, you do rent.
Yeah, so the whole thing is our parents have brought us up to do certain things, and it's all based on emotions and what's good in society. I'm an accountant by trade, and the numbers give you a completely opposite thing. So especially in Australia, all my portfolio is under $1 million, which is in high demand, and so the rental yields are very high. Whereas people wanting $5 or $10 million homes, most people think poor people rent, and there's no rental demand for that, and so literally the price goes down. So whatever you can afford to buy, you can afford to rent somewhere 3 or 4 times more expensive for the same money.
So you're actually, so it's a value proposition then. You're looking to actually live in a home worth far more and by renting. So
it's like, if you remember the game Monopoly, is you buy lots of little houses that are cheap and affordable that everyone can rent, and then you go and rent a hotel on Mayfair or Park Lane and it rents for peanuts.
That makes a lot of sense. It's going to change. I can see I'm going to have to change the way I think about property from talking to you. Next up, just talk us a bit about how, you know, they always say bricks and mortar was always the way to go. Why is that?
Well, I think the great thing about bricks and mortar is that I think the real wealth is in leveraging and compounding. And so the banks are happy to lend 90 or even 100% at times on property because they know it's safe, if it's in a blue chip location and again if it's affordable. And so if you can leverage your limited cash by maybe 5 to 10 times, then you've got the compound increase as well. That's the thing that makes it solid, whereas you wouldn't want to do the same in shares because you just never sleep.
There's also concern, though, that if you make that purchase and if you aren't able to rent it out, then you aren't able to make the payments as well.
Then you have all the management issues as well that come with renting property.
And this is the typical scares that everyone comes up with.
Yeah.
But the main thing is it comes down to asset allocation. So if you buy in the right suburbs at the right affordable prices, you don't have to be a genius to find the right kind of assets, but people are buying emotional assets of what they think is beautiful to try and boast to their friends, I've got a penthouse here, penthouse there, but they're the things that don't rent that well.
Okay,
so say for Australia, if you get a 2-bedroom unit in Bondi Beach, which everyone in the world knows, it's affordable, it'll rent every single day of the year, especially if you rent it from summer to summer. So we look after 300 or 400 properties on behalf of clients, and the vacancy would be less than a week, if that.
So again, you would say location, location?
100%. So a lot of people are buying what's emotionally pretty, whereas we'd rather buy something that's the ugly duckling but in the right street and the right location, because you can never move the property afterwards, but you can always do it up. So if you get used to what cosmetically looks horrible, and then with a lick of paint and a bit of carpet, it transforms pretty much anything.
So really you've got to think and almost see what isn't visible first.
Exactly. So, I mean, I quite often say is the reason accountants are good at investing because accountants have got no emotion. I mean, ultimately, property
and also
investing,
they're looking at numbers, basically. They're not looking at aesthetics.
It is. Property investing, what I do is basically spreadsheets. The property is the byproduct in a way, but ultimately I run spreadsheets, and that's the logic that I use.
Okay. Now, interestingly, you say that as a property investor, you don't advocate buying and selling. So you advocate buying and renting and then revenue that way.
Because wherever you are in the world, the cost of getting in and out of property is massive. And there's capital gains tax, not in every country, but in a lot of countries. And so if you're throwing away 2 or 3%, maybe when you sell, 5% or 6% to rebuy, you're throwing away 10%, even if it's your own residence and you're not paying capital gains. And that's 100 grand on $1 million property, which is a deposit on the next property. So what I'm an advocate of is going back to the bank and refinance. I'll refinance every year, and it's almost like selling it to the bank, buying it back on the same day, but without any of the transaction costs.
But there's a certain lifestyle that you have to be willing to put up with, though. Like if you're renting, you're always at the mercy of the landlord kicking you out any time, etc., right? But
True.
It's worth it to make money.
Exactly. And so the thing is would you rather live in a $1.5 million house that you own yourself and you're tied to, and if you lose your job, suddenly you're in trouble, or for the same money, you could live in a $5 or $6 million place? if you go and look at those two different properties, they're pretty different.
It depends how you look at it, I guess.
Exactly. But you've got to like change. So my wife and I, we love change, and we assume we're going to get kicked out every year, and it's a bonus if we stay.
Right.
And then we pay the removalist to come in. So we go off on holiday for the weekend, the removalists come in, move the kitchen to kitchen, lounge to lounge, bedroom to bedroom.
Ah, interesting.
I suppose it also means you can move from a new place to a new place to a new place every time. But I mean, are there any times when the market conditions indicate that it might actually be better to live in a home that you've bought?
Look, it could do. For most people, it's the emotions. So a lot of the time I talk about the renting thing, it's contrarian and people like a different story. For the 95% of people, they want a roof over their head, it's forced savings and it's the best thing for them to do. But again, if you want to be out there and do something completely different and you like change, like I haven't got a 9-to-5 typical job, and so I'm happy doing those kind of things. For us, it's cheaper for us to live in a hotel, so most people think they might be out on the street. If we're suddenly out on the street, we'll just go off on holiday or just go move into a hotel and it's actually cheaper. So again, it comes down to a mindset type of thing.
We're talking about mindsets. What keeps people what's the fear that's stopping people from investing?
I think it's the things that you guys mentioned a few minutes ago. It's worrying about losing your job, being tied to a mortgage, having tenants trash the property, tenants not pay the rent. And look, all of those stories are out there and the media follows those stories because it's entertaining. But in reality, if you follow some basic rules, and once you've got a number of properties, the chances of it happening to every single property is diluted anyway. Most of the time you don't go through those things. And when something bad happens, there's insurances and it's never that expensive.
So tell us, what's the sort of typical mindset of the savvy investor? I mean, aside from the things that you've mentioned to us, the things to bear in mind, what's the mindset that makes them tick?
So the big thing is they've got a reason, they've got a why. Either they're trying to accumulate a lot of cash, or they want to get out of work. They've got a big reason. Most people don't have a reason, and that's why they don't get out of their comfort zone and make change, because change is uncomfortable. And so I guess for a lot of these people is they don't time the market either. It's timing the market. Sorry, it's time in the market rather than timing the market. So I bought a lot of mine in the GFC, because buying in the GFC, there was no one buying, there's plenty of choice, you're paying a reasonable price. Whereas in Australia, since the day after the election, all of the sheep are all following each other. The market's moved 10 or 15%, and you're getting a second-rate property and you're paying 50 or 100 grand over. And so that's what the average investors do. So they're buying purely on facts and figures rather than any emotions, and they just constantly accumulate.
There's a saying that good things don't come cheap. Does that apply when it comes to property investment, or can you get a real
100%.
bargain?
I don't think. I buy about 50 to 100 properties a year on behalf of clients. I don't think I've ever bought a cheap property.
Okay.
But in the GFC, I bought a block for 1.9, put 600 in, so it cost me $2.5 million. 3 months later, the bank revalued it at $3.5 million, so I made $1 million in 3 or 4 months. And the valuer still swears blind that I paid fair market value for it. And it's just because I then developed it and renovated it that's what made the money.
Right.
So I think things are cheap because no one wants them.
Yeah.
That's what made the money.
Right.
So I think things are cheap because no one wants them.
Yeah.
And so I'd rather pay full price for a decent property in a decent location because it's sophisticated, everyone knows what the price is, than buy something, say, without parking that's 100 grand off. Right. Because the growth will always be stunted.
Okay, good advice there.
Okay, thanks so much for coming and speaking to us,
Pleasure.
Chris, property guru, Chris Gray, on making sound property investments.